Well, hey there, my name's Luke, and you're listening to the Good Folks Doing Good Work podcast, a podcast where I interview folks all throughout the coffee supply circle about the good they're trying to bring into the world and hopefully remind you to keep bringing good things into this world in your context. Let's get into this week's podcast. Well, today I have the privilege of chatting with Vienna Christ, who is a CPA and the founder of Heyday Coffee Accounting. Vienna spent 6 years working in the specialty coffee industry when she noticed a trend. The financial side of running a coffee business can often be overwhelming. She then set out to be the solution to this, but not before gaining a diverse accounting experience while working for a large privately held company and generalist accounting firms. In 2021, she acquired her CPA, then started her own accounting firm in 2022. In 2025, she founded Heyday Coffee Accounting and narrowed her focus to serve the coffee industry to make accounting a lot less overwhelming for owners. All the way from the state of Washington, Vienna, welcome to the Good Folks podcast.
Thanks, Luke. Excited to be here.
Vienna, what was the moment that you realized that you loved the coffee industry?
Probably a couple years into it, after I'd become a barista and was like loving just being a barista. I still hated coffee at the time, but loved everything else about about working in it. When I realized I really loved the industry was probably when the shop I was working at switched to Stumptown. And the guy that was working with us really inspired me and casted this vision for what coffee can be outside of even just kind of the local mom and pop shop. And so I would say that's the moment when everything really started to come together for me for coffee.
What did that Stumptown individual tell you that broadened your understanding of what coffee could be?
Well, it was the first time the whole bean to cup concept was introduced to me. So really understanding the whole process, from the farmer to the cup that I was brewing. That was a big part of it. But even more so is the hospitality aspect. I was, getting into the snobby coffee vibe at that time. And so I was like pretty stoked to be able to make really good coffee for people. And I remember he was training us and he's like, if somebody walks in here and orders a mocha, you make them the best mocha they've had in their life. And I was like, yeah, that is exciting to me, where you learn how to make things approachable and you don't look down on people for a difference of opinion or understanding.
Hey, really quickly, I have 3 things I want to share with you. Number 1, I run a consulting firm called Pomelo Coffee Consulting, and I only work with coffee roasters, and I help them with 3 things: their people, their processes, and their profit. Now, within Pomelo, I also run a cohort for owners, and then there's a separate one for leaders that work for coffee roasters. Now, they're structured similarly. There's some learning opportunities, there's some reading opportunities, there's some hot seat sections, and I gotta tell you, it's been pretty amazing to see what's possible when a group of owners and leaders are sharing the things that they're facing, both the good things and the bad things, and providing some camaraderie and also a mirror to see that I'm not alone in this world, in this business, and there's people who are doing similar things, maybe have already done the things that I'm doing and that I'm facing. So if that sounds interesting to you and you want to find some other roasters and have some camaraderie with them, you can go to my website, pomelocoffeeconsulting.com, go to the Junto tab. There's a tab at the top of my website, and you can learn more and see if you're a good fit for that. Lastly, I wrote a book. It's called The Owner's Manual, A Guide to Sustaining a Coffee Roaster. And really it fleshes out the framework that I use when I work with clients, the core 7 that is. And if that's something that sounds interesting to you, you can go to my website. There's a tab at the top that says book, and you can snag yourself a copy. All right, back to the show. I think that that's applicable in the space that you're in as well, because there's so many owners out there that maybe don't have the same understanding of accounting, or maybe are just scared of it and don't want to look at it. And so that's totally applicable in your space. As I was preparing for this interview, I was considering the number of coffee roasters who have asked me for a recommendation for an accountant, or just a bookkeeper. And I never have a good answer for them, because it seems like there's good accountants and firms are very difficult to come by. So I'm curious, why do you think it's difficult to find good accountants in the coffee space?
Well, this is a great question for accounting in general right now. Why is it hard to find good accountants? So I think the scarcity of accountants in the first place is what's making it hard. The second reason is, since the coffee industry can be so low margin, if somebody is going to specialize in an industry, they're often looking for something where there's a lot more cash flowing. Think dentists are a huge one right now. They make so much money and they don't want to spend any time on their books if possible. And so when you look at the way the industry is going, sometimes it's hard for people to want to specialize in something like coffee and really get to know it, because they might be asking, like, where's the money in it?
So it's a numerical lack of accountants in the space. And then because coffee is such low margin, it's not monetarily interesting to the folks that are getting their CPA and going into this industry.
Yeah, I think that's probably a good portion of it. I think also a lot of the people coming out of accounting school, the ones that are coming out, are working on climbing different corporate ladders. And you don't normally jump into creating a space for a particular industry when you're doing that. So I think that's probably part of it. And then a lot of small coffee shop owners or roasteries, like, they're doing their own books. So they will reach out to accounting firms, but I think they are hesitant to. And that's not necessarily just for the coffee industry. It's small business owners as a whole. But I think playing into that margin thing, if your margins are already low, you feel like to pay X amount of dollars for an accountant feels like a necessary evil that you could probably just figure out yourself.
Yeah. Sounds like we need to make coffee companies a bit more profitable if I'm reading between the lines here.
I agree.
So talking about making folks a bit more profitable, in your experience, what advantages have you been able to capitalize on because of your knowledge of coffee to help a coffee company become a bit more profitable?
Yeah, well, because I worked in coffee and because I kind of had that context already, a lot of conversations with coffee businesses that can start a lot higher level. And so instead of going to a generalist firm where it's like, okay, let's learn what your industry is to start with, I can just jump right in and start asking a lot more individualized questions, because the coffee industry, they play kind of in the inside of these boxes. And then very rarely do you kind of step outside of that to do something different or unique. Not saying nobody's unique, but when it comes to the finance side, there are only so many ways to, like, skin a cat. Yeah. And so there are only so many tech stacks that we're generally looking at. Not a lot of these coffee businesses have a huge difference between what they're working with. So we're able to kind of jump in and begin immediately looking at numbers and asking the questions that somebody else might not be able to ask right away, and understand some of the pitfalls that might be holding them up compared to another industry.
For me, what I'm hearing is the context switching, the time that it takes to go from, well, I'm doing work for a plumbing company, and now I'm doing work for a dentist company, and now I'm doing work for a coffee company. The context switching that is, you don't have that loss because you work with coffee companies that have relatively the same P&L structure, relatively the same inputs and outputs.
Yeah, it makes it less stressful for me too. Because if I want to deliver a really high quality product, and if I want to be able to deliver super high quality insights, it's less stressful for me because I can put my time and energy into learning one industry really well. I can listen to all the podcasts and read all the books and everything about one industry and dig in really deep. Where, when you're going between industry to industry, like the first firm I was at, it's tough. You want to deliver something specific and something really helpful, but a lot of times you end up just dropping into compliance, which is, it's good for taxes and it's clean, but it's not as useful for good decision making.
You're bringing to mind something that one of my heroes, David C. Baker, talks about, being specialized and the benefits of being specialized, with the asterisk of, oh, well, if you've worked with a company that's similar to mine, or maybe even in the same area doing a similar thing, How is that not a conflict of interest? And I face this in my own business as well. And the reality is, if you have two clients in the same industry or in the same space, this is what David C. Baker says, that's a conflict of interest. If you have three, it's a specialization. Meaning, when you're focused on, I work for coffee companies, you now we have way more insight and ability to look at a P&L and immediately know, okay, there's probably an issue here, here, and here, or this is where we can save money here and here and here. And so I think it's super powerful for folks to understand speed to get you up and going. The specialization is super important. And then you said something really interesting about dropping into compliance.
Yeah.
What does that mean?
So a lot of people, and maybe this is where you're going with this, a lot of people view bookkeeping accounting as compliance. And by that, I mean everything is okay for taxes. And so we see this process as a necessary evil. And my accountant bugging me is always a bad thing. It's almost never a net positive, even if they are communicating with me, because a lot of firms have this stereotype of not getting back to their clients in a timely manner anyway. So if they do reach out, it's probably bad news. And so we have this compliance piece which is good for taxes. And I think that there's just a lot of firms that's where they're falling. And it's not necessarily bad, because some people really don't care to look at their P&L, or they're just like raking in the profits and they don't care to refine anything. But I think for coffee in particular, to view accounting just as compliance is a mistake, because you have so many opportunities in front of you when you are confident that your books are accurate, on time, and actually useful.
Accurate, on time, and useful. I love that. So that's what a lot of the accounting firms that I'm aware of do, is let's just make sure you're legal. Let's just compliance, dropping into compliance, like you said. What sort of opportunities do you see that are just like low-hanging fruit? Almost every account that you come across isn't doing this.
Well, from a bookkeeping side, a lot of them are just recording sales improperly. That's a huge one. And because so many of the key metrics you need to track are some sort of formula against sales, if your sales aren't accurate, then every metric you have is inaccurate as well. And so this isn't really anybody's fault necessarily, because nobody's sitting down and training small business owners how to make sure that Square and Toast are importing into QuickBooks properly and how to check that.
Sure.
But that's a huge one. That's a huge mistake I see, is improper recording of sales. And then, of course, not tracking labor really well on the profit and loss. And then cost of goods sold. Those are probably the top three. If I'm going to look at somebody's books and we're going to dive into just three things, we're going to make sure that sales are actually being recorded properly and not overstated, because overstated is the most common thing I see. And then we'll drill in and make sure cost of goods sold, at least I have a plan for that, which unfortunately most people aren't working on a plan for that. And then also drilling into labor and making sure that they understand the difference between the wage they're paying to the employee and then the taxes that they're paying on that wage to the employee.
What is the implication for sales not being categorized correctly? As you said, like from Square, from Toast, what have you?
Yeah.
What are the implications of categorizing them correctly versus not?
So like I was saying, one reason is those key metrics. So if your sales are overstated or higher than they should be, and let's say we're trying to get our cost of goods sold percentage, if you're saying that your sales are $100 and your cost of goods are $30, well, really quick math, that's 30%. And you're like, okay, well, my COGS are like hanging in there, right? It's not red flag time, but maybe I could take a look. But let's say that you didn't import things properly and your sales were actually $80. And those other $20 are going towards tips that came in at the cash register, sales tax that you collected, gift card income, depending on how you want to classify gift card income. And suddenly that cost of goods sold number is way more than 30%. And so you might look at your P&L and think, I'm doing great. I'm doing great. And it's like, no, this is why you're bleeding money, because you don't realize that things aren't dialed in.
And that seems like a simple, like we said, low-hanging fruit. It seems like a simple fix. Is it?
Well, it kind of depends, honestly.
Yeah.
A lot of people, the Square QuickBooks integration gives me headaches all the time. And so I think some people they're like, oh, look, there's a connection between QuickBooks and Square. I'll just hit connect and my life will be easy.
Right.
And I've spent before 15 hours cleaning up just like 2 months of Square stuff, trying to sync into QuickBooks that did not work. So it can be an easy fix if you have somebody helping you figure out where to put the numbers, but it's not always so easy, unfortunately.
So the core services that you offer are accounting and strategy, correct?
Yeah, we break it up into 3 buckets, and all 3 buckets are contained in every service package that we provide. And so the 3 buckets are bookkeeping, accounting, and advising. And we break it up that way to explain kind of the different processes we're going through to serve them. And so in this case, bookkeeping is really just making sure data is entered properly. And that's about it. So making sure that everything from the bank comes in, making sure, just everything goes to the right places. And then the accounting is where we actually take a step back. We look at everything and say, does this make sense? And then we start evaluating, are there trends? Are there key metrics that are looking off? And we start analyzing more so. And we deliver that as like a product, right, at the end of the month. But then the advising part is where we say, okay, so now that we're confident everything's accurate and we have some analysis, what do we do about it? And then we strategize together on what the next steps are. What are the most important things to do first? And then we walk from there.
I think it's a really methodical approach for you to, one, make sure the data is correct, then to analyze, and then to say, now what? And I think oftentimes what I have found with accounting firms, they leave out the analyzing part. And I think my instincts tell me that we live in the compliance spot. And that's what they're trying to do, which is great, right? We want to make sure we're doing things legally, but that's maybe not the best situation for the business because we're leaving opportunities off the table to be a bit more strategic. So with that, once you finalize your analyzing and you move into the advising portion, what does it look like? Is it a one-time thing where, hey, these are the things we need to structure about the business, or is this an ongoing service that you provide to folks?
Yeah, it's ongoing. We actually require it. So unless somebody's working with a business advisor already, we only want to work with people right now that want the help and want to learn and want to grow. Because we don't want to be the business model where we spit out financials and hope you figure it out if you look at them at all. Just because that's not why I got into this. I didn't get into this because I love coffee. And so I just want to look at coffee numbers all day. Like, sure, I like looking at numbers, but I could have done that with a lot of industries. There are other industries that interest me, not as much as coffee, but I could have done that. So the reason we made Heyday was because we wanted people to actually learn and grow and thrive. I know people, I have friends in my town that own coffee shops, and I want to see them thrive, and I want to see their business live to see another day. And so I care about that more than just looking at the numbers. So from that perspective, the advising is baked into everyone. Some packages, it might be quarterly, some monthly, but it's always there. So we would be tracking these goals with people.
I think it's very wise to require that, because if you're just doing the work and you're leaving strategy off the table, you're leaving a lot of opportunity off the table, and you're denying your clients an opportunity for ongoing support. So one of the other services that you offer is the financial reset. What is that?
So whenever somebody comes and does an intro call with us, the next step is always something we call discovery, where we actually go through and look at their books as they are. And then we actually give them a presentation that they get to keep and run with, even if they never work with us again, to tell them the current state of their books, if they're clean, if they're messy, if they need some help. And then the financial reset is an option that they can choose to do with us if they're going to work with us long term, where we go and we clean up prior data, generally for the last tax year, to make sure that if we're going to compare to prior months or prior years, that we at least have one foundational year that we can use to look back on.
Is that typically where you find folks where you have to go through the reset because they haven't done a good job? Or is that sort of compulsory if the individual or the business is saying, I want you to look at these numbers first?
A lot of people need some sort of cleanup. Most people.
Makes
It's
sense.
pretty rare that I open up anybody's books and I'm like, wow, this is just so beautiful.
Totally.
It's just rare.
Yeah.
Even coming from people who aren't DIYing, honestly.
Sure.
That's frustrating on a different level when a professional bookkeeper is dishing out bad books. But
right.
Yeah. So the financial reset, sometimes it's really extreme. I've had pretty extreme situations where we had to go through and, save somebody $12,000 in taxes that year because of overstated income, but then there are some cases where it's like, oh, you just need a little bit here and there and then we'll be good to go. But most it's in the middle.
So let's put ourselves in the shoes of a cafe owner or a roastery owner who is getting the sense their current accounting firm is, as you said, dishing out a poor product and isn't actually doing a good job. What are some of the things that you would advise this owner to think about as they consider this accounting firm or that accounting firm or Heyday? What are the questions that they should be asking as they're vetting this individual or this firm?
Yeah, if they're looking just at bookkeeping and advising, I wouldn't trust someone just because they have the little QuickBooks Pro Advisor stamp next to their name. If you're a coffee business, I would be looking for someone that actually has experience in your industry to some extent or an adjacent industry. So food and beverage is a pretty common one to have overlap in. I see a lot more people specializing in that than purely coffee. So that would be one thing. Another one is communication, making sure that they're getting back to you when you are inquiring with them, making sure that they know the types of questions to ask you. Like if they say, oh yeah, we serve food and beverage industries, maybe press them a little bit on that and just kind of get their idea of, well, have they worked with my point of sale system before? And if not, have they worked with one similar? Because they might have similar pitfalls, Or think through, are they going to actually deliver something to me that is useful? So understanding if the accounting firm is leaning towards just compliance versus some sort of advisory would be good. Asking how frequently you're going to get your financials, what they would look like, if they're going to be able to give you help with understanding and using them, or if that's not something they offer. You can kind of decide what you want. If you don't want to be strategizing and learning and growing, then a firm that just spits out financials is probably fine for you. But if you want to really get into it, you should find an accounting firm that's really wanting to see you thrive as a business, not just take your business.
Such a great take. So just to recap, they need to have some sort of specialization in an industry that's tangential or connected to coffee. Communication, how's their communication in the process? What tools and softwares are they familiar with to see if they're going to be able to function within the tools and softwares that you use? Are they more of a compliance firm or an advisory firm? Time to deliver, and do they want you to succeed or not? Are they in your corner? Did I leave any out?
That was good.
Did I leave any out?
I don't think so. I think the only thing is there are some generalist firms that work with a large percentage of a particular industry. And so they might say that too, is like, we generally like to work with these types of people. You don't necessarily need somebody to say, I am a coffee accountant or I am a, restaurant accountant. There are people who do it without explicitly naming it in their firm title, but you might be able to find it on their website. Also use your community. If you have people that love their accountant. I met a guy in my city And I told him what I did, and he's like, I love my accountant. And he runs a coffee shop. And she's really involved and helps him know when he can and can't spend money. And I was like, awesome. It sounds like you got a great accountant. And so like maybe he should go, recommend to other coffee shops, go to my accountant, right? If he's really being served well. So I would say ask your community if you have one.
That's a really good word. What do you find yourself continually educating owners on?
A lot of separating personal and business expenses. It sounds like the most basic thing to say, honestly. But that's one that I am driving home all the time. That like receipt tracking and separating business and personal. If I had to like count how many times I'm having that conversation, it just doesn't end. It just doesn't end.
Let me get this right. You're supposed to have one bank account for everything, and it's your personal account, right?
Yeah, for sure. That really protects you if you're audited or if you have an LLC. Super, high protection there. Okay. Which is something people don't realize is that your LLC protection may not be there if the courts look and they're like, there is no separation between you and your business. They can basically decide the LLC doesn't matter, which is really scary.
Wow, that is really scary. So, okay, so just so let's be clear for everybody. You should have a separate bank account for your business and your personal. Yes. and
they should not intermingle.
Correct.
Yes, and if you're going to take money out of the business or put money in, it needs to be well documented that this is the purpose, is that I'm transferring in or out for personal reasons.
So where does that go?
Well, if you're making contributions into your business, that's going to be going into the balance sheet in the equity portion. And same thing if you're taking draws. So S-Corps are a little bit different in the language about distributions and so are partnerships, but we'll keep it simple. Like a single member LLC, you're not paying yourself through a W-2 wage. And so the only way you're getting money out of the business is through a draw. And that does not go on the profit and loss. That goes through the balance sheet on the equity section.
Super helpful for folks. You spent some time working as a fixed asset accountant. First, what is a fixed asset accountant?
It's a pretty boring job, to be honest, but I needed that job to be boring at that point in my life. I was pretty stressed in my prior position. So essentially, I just made sure that when assets were purchased, they were put onto the balance sheet. And we had a lot of work in progress where there were items that were being built over time. And so they were in a holding account, like a construction in progress type account. And then when they were finalized, I would move them to a whole asset that we would book and then track from there for depreciation.
You're saying it sounds boring. I think it's really important. How does your experience doing fixed asset accounting, how has it changed sort of your recommendation or your approach to a business that maybe owns their building or has other assets that can be depreciated?
Well, I mean, properly tracking them, of course, good documentation. If they're looking at tax purposes, you could find a great tax person that can talk to you about it's called a cost segregation study. I've never done one myself, so I can't give you much more information there.
Sure.
But yeah, tracking your assets well is important because you need to be able to track the depreciation so that when you go to sell or get rid of the asset, you know what it's worth on your books so that you understand if there's a gain or a loss. And if you're also going to sell the business, I like to be able to see clearly on the balance sheet what assets they have there that they've been booking. Sometimes balance sheets can get pretty messy with small businesses because they forget that they sold something or they forget like when they bought or sold it. And those things do matter, especially if you're going to sell it and you're just throwing someone a balance sheet, before there's anything else done. They'd like to see too, not just a big line item that says equipment. Hopefully, at least to me, I like to break things out a little bit more clearly than that. That this is the roaster or this is the slayer or whatever it is. And so they can see kind of clearly what you're representing as assets.
So what do we categorize as an asset that we can depreciate? Is there a dollar amount or is there a way to define something that can be categorized as an asset?
Well, you're not going to depreciate land. That's a big one. So it can be on your asset list, but it's not going to be depreciated.
Right.
As far as a dollar amount, I recommend having some sort of document that outlines a dollar amount that you decide to put as a fixed asset. So there's a safe harbor rule that most small businesses are going to fall under with the IRS, and that number is $2,500. So that's what I personally use because I don't like putting a lot of little teeny things on the balance sheet. That way, it's really easy to just expense them year 1, 2. But it's really up to you. Some people do $500, some people do $1,000, but the $2,500 is an easy one to just use if you're not sure.
Right. And if you were doing it for $500, that would get pretty untenable pretty quickly.
Yeah, it certainly can. So I know depreciation with the new tax law that was just finalized, it sounds like there's a lot of benefits for people being able to depreciate stuff in year 1. I couldn't tell you more about it than that since we're not a tax firm at this point.
Right.
But it is making it more easy for people to expense things in year 1 than in prior years.
Understood. So a good rule of thumb is if it's $2,500 or more, probably should be accounted for.
Yeah, and I guess I didn't answer about what an asset is. Often we call it like tangible property.
Something physical.
Yeah, you're not going to be putting as an asset what you paid your marketer, for example, or what you pay me. It would be an object, probably.
Understood. So like a coffee brewer, grinders, espresso machine, a van. Trying to think maybe your roaster.
Yeah, for sure, your roaster. Yeah.
Probably good to have that accounted for. Understood. I have found quite a few roasters don't actually account for this and aren't depreciating their assets. And so, yeah, it's very helpful.
Yeah, it's important to have a clean balance sheet. And a lot of small businesses don't.
Yeah,
unfortunately.
It's tricky. There's a lot to keep track of here.
There is. And that's why it's so intimidating for people. We're hoping to help lower the factor.
So let's talk about the intimidation factor. So somebody comes to you and they're like, Vienna, I'm gonna start a coffee business. I know I don't know everything. I'm a little intimidated about accounting. What are some resources or maybe a book or a video or something that you'd be like, don't submit any paperwork or anything until you read this or until you watch this video? What are you telling? What resources are you giving them?
For tax, there's this woman. Her name is Jasmine DeLucci. She's a rock star. She has a free community that you can be part of. Have you heard of her before?
I've not. I'm going to look her up.
So for tax, I learned stuff from her all the time too. So for tax, I love her because so much of the internet is full of people that really should not be opening their mouths about tax. Tax is so much more complicated than some people think it is. And I'm not personally passionate about it myself, but a lot of people are just reading the tax code and thinking that's it, and then deciding they're going to interpret it how they want to interpret it. And they're putting a lot of people in dangerous positions. Mm-hmm. So if you want a lot of really great advice, I would go check her out on YouTube.
Very cool.
And then find her free community where you can ask questions. As far as for bookkeeping and accounting, I don't really have a resource that I've been recommending to people yet. We're hoping to create a resource of our own that is for for coffee businesses specifically. So that's kind of like a long-term goal. Hopefully in the next year or two, I want to have a course so that if somebody is going to DIY, at least they're pointed in the right direction. And that's another goal, because not everybody, even though we try to serve people well, not everybody's going to be able to afford in every situation an accountant. So I'd like to be able to say, well, here is a resource that I personally approve of. Go run with it.
Let's put ourselves back in the shoes of a business owner. They have historically not made money, not terribly profitable. So they don't owe a ton of tax annually because they're not making enough money. But then they get written up in a magazine locally, and now they have more business than they know what to do with. And now they're looking at well, I'm probably going to owe some tax because we've all of a sudden got really busy. What would you say to somebody who's in that position, who hasn't really had to worry about what they owe for taxes, and now it's time to start thinking about how do we strategize what's next?
That's a great question. So if you're just dipping into profitability, it's really easy to see that cash and just think of all the beautiful, lovely things I can start doing now. Now I can give the raises. Now I can buy the fancy things.
Right.
And it's hopefully you've already started to take a step back and consider your numbers. And you've probably had to be a little tighter with cash flow or loans or whatever to get through. And we need to take a big pause and not just go crazy for a second and not be like, let's celebrate hard. Like, you should celebrate. But I want you to start thinking about, is this the long-term future? And if so, let's start thinking about how to put money aside for taxes. Because I think the biggest tax planning thing that needs to happen before any other strategies is just that you're able to be smart with setting money aside. And it is possible. You just have to be disciplined about it. So that would be the first thing. If you, let's use that simple example, the LLC single member. If you're looking at that net profit number, you need to consider if it includes depreciation on any of your assets, because depreciation will lower that number and make it not so much tax owed. Single member LLC, you're just going to be taxed like self-employment tax. And so that's a pretty high number. It's like 15%. And so generally people do pretty well if they put aside 30% total of the net profit for taxes, because then you have to add in whatever tax rate you fall into when you actually go to file your taxes. So generally 30% is a good rule of thumb.
I was going to ask you, how much should they be setting aside for taxes? How do we know? Just to summarize, so we need to think through, is this going to be a sustained growth? Is this profit we're seeing something that is going to keep happening, or is this just a one-time pop? Next, we need to think about our asset depreciation and get an estimate of what that number is. And then we have to essentially put 30% aside after we have that estimated depreciation. Is that correct? Very cool. That is really practical. Thank you.
Yeah, you can get to the end of the year and not freak out about taxes. It is possible. It takes some discipline, but you can do it.
I want to ask you about a riveting topic: legal corporate structure. From my understanding, there's like 5 different types. There's the sole proprietorship, there's the partnership, there's an LLC, S-Corp, and then C-Corp, if I'm not mistaken. Why would somebody want to be a sole proprietor? Is there a reason for that?
The reason I'm given most often is that it's cheaper and easier. So to your point about the 5 structures, essentially there's not really a thing as an LLC to the federal government. The LLC is really a state thing. So if you're a sole proprietor, if you're a partnership, if you are an S-Corp, all of those can be an LLC at the same time. The C-Corp is really its own separate thing. And so if you are an LLC at the state level, then the federal level is going to tax you as either a sole member or a partnership, unless you elect to be taxed as an S-Corp, and then you could do that.
Understood. So why wouldn't somebody want to be a sole proprietorship?
Liability risk. That is the biggest one.
Okay.
So when you are a sole proprietor, there's no, we call it like a veil, basically, between you and your business. So if something goes wrong and somebody sues you, you are just completely exposed, you personally, you and your assets. When we do the LLC and manage it well, so you're not dipping in to it for your personal expenses all the time. When we separate that properly, if somebody were to sue you, they're bound to just the LLC. They can't just come and take your house just because. There's like this veil between you and your business where you are 2 separate things.
Understood. And so the LLC protects you and your property if someone was to sue you or something of that nature. Why would somebody want to be an S-Corp?
So this one is really popular to push for tax savings. And it is a big tax saver if you meet some certain metrics. So a lot of people are basically just go become an S-Corp and you're going to save a lot of money. And you might, but it might be wrong. And so if you got audited, you could be at risk. Essentially, the S-Corp, it gives you the ability to be an employee of your business, which is awesome because then your like federal taxes and like your Social Security, Medicare stuff, that's all dealt with as a W-2 employee within the business. And so then you get to be an expense to your business. Like you get to be an actual expense, which is awesome. Because when you're just a sole proprietor, you're paying 2 sides of Social Security and 2 sides of Medicare when you go to file your taxes. With an S-Corp, your business pays 1/2 of that, like as if you're a normal employee. It's all expensed. And so then your net income number is lower. And then any distributions you take from that net income amount aren't taxed with self-employment. So you're saving like 15% on that bottom line number, which is awesome. That's a huge amount. Sometimes it saves people tens of thousands of dollars. The problem is if you're going to be an S-Corp, you have to pay yourself something called a reasonable compensation. And you see these people out there recommending, I've heard crazy things like, oh, just pay yourself a couple $100s a week. And it's like, would you pay anyone else $200 a week to do everything? Yeah. And reasonable is defined by the IRS, not by you. And so I've also heard, well, it's not reasonable for me to pay myself that amount in my first year of business.
Sure.
Because my business isn't that big yet. I'm like, then it's not reasonable to be an S-Corp yet, because based off the IRS rules, you have to pay yourself essentially a fair wage for your work. So to become an S-Corp, and Jasmine has a great video on this with a calculator and everything, but it needs to make sense that your business can pay for you and your salary and its taxes, still be profitable. So you don't want to have a net loss because you're paying yourself as an employee. And then you need to be able to make sure that it makes sense to pay the extra to go file as an S-Corp because it's a whole different tax return. So now you're entering into a business tax return that then pushes out something called a K-1 for you to take to your personal tax return, because an S-Corp is distinguished from you in a different way than just being an LLC, like a sole proprietorship LLC.
Okay, so it's not just oh, we can become an S-Corp and then we save all this money. It's we need to pay ourselves and the taxes and be profitable and have enough money to be able to make that transition. Is that correct?
Yeah, so it's like a domino effect of stuff that has to line up. And it's just really hot right now to just be like, yeah, I'll be an S-Corp and pay myself $1,000 a month and call it good. And
right.
Try to take advantage of the lower tax rate. So if you don't want to have to pay extra taxes in case of an audit, you want to try to follow the rules.
Yeah. It's best to, follow the rules. So I've also heard that there's a threshold of profit to where it makes sense to shift to an S-Corp. Is that a real thing? I've heard anywhere from $50,000 to $80,000 in net profit. Is that a real number, or is there another metric that we can go by?
I really go by the reasonable number because that's safer than just saying a random number. So yeah, I mean, companies that are profiting that much might be able to make sense. And often in that, like, sure, that $80,000 number, depending on what type of work you're doing, that could support you in a salary, but not for everybody. So for coffee people, you would want to think about the tasks that you're doing and what you could pay someone to basically do that mix of tasks in your business for the amount of time that you're doing it. And then you would tack on all of the taxes that your business would have to pay, like payroll taxes. And then that amount, you push that in, and are you still profitable? So if you're making net $50,000, but you come up with this, well, I would have to pay $60,000 if I hired someone to do this. And if that person was me, well, then now you're at a net loss. So that would probably not be a good threshold yet for your business.
Understood. So the that's not a good indicator of its time to move to an S-Corp.
Yeah, I mean, this is going to change industry by industry too. I mean, if you're in an industry where maybe a low salary is $100,000 a year, well, 50 or 80 is not going to do you well for that.
100%. Right.
Yeah.
I just keep thinking about the owner out there who's had the same accountant for the life of their business. And there's an element of comfortability with them because they know my business and haven't gotten me into trouble yet. But perhaps I don't know enough about accounting to know whether or not my accountant is doing a good job or not. Are there any major red flags that you have seen when you've taken over the books from somebody where you're like, how did you last this long?
Yes, the balance sheet. So a lot of people, they think that if I just look at my profit and loss, I'm probably good. But you need to be looking at your balance sheet. So if your accountant is not sending that to you, first ask for it.
Okay.
And if they kind of push back, that's a big red flag. And then once you look at that balance sheet, I want you to start looking for things, even if it's hard to understand. Just start looking at the line, looking at the number, and start asking yourself if that actually makes sense. A great example of this that's less applicable to a cafe, but would be more applicable to a roaster is, are there accounts receivable or accounts payable numbers that are really big that don't make sense or are negative? That's a big one, is when you see things on your balance sheet that are negative and you don't know why. Really, one of the main things you should see on your balance sheet that's negative is something called accumulated depreciation. That's the number that is lowering the value of your assets as they depreciate over time. That one is correct to have negative. But if you're seeing other negatives, negative assets, large negative bank account balances, large negative liabilities for payroll taxes, those types of things, we need to start asking questions about why. Because a profit and loss at first glance can look beautiful. It can look good. But we say the bodies are buried on the balance sheet. So you can
That's amazing.
you can find a lot of things that went wrong on the balance sheet, because especially if they don't know what they're doing, a lot of entry-level bookkeepers, they'll just push something to the balance sheet because they don't know where else to put it. And well, if you don't know where to put it, there's probably a reason something is going on. So the balance sheet is a big one to ask for and start looking at numbers. Definitely start there, I would say.
I feel like that's a really great place to start. And you made this very practical that if anything in the AP or AR is in the negatives, we should look into why.
There are some times that there are negative things that make sense. I have seen negative bank balances and it makes sense because you really are just overdrawing on your bank account.
Sure.
So we are sitting negative. But generally, it shouldn't be that way. And your ending bank balance should be pretty close to what your bank actually said. It probably won't be exact, especially if you're writing physical checks that are recorded in QuickBooks or if there are things waiting to clear. So, but it shouldn't be a huge discrepancy. Like if your balance sheet says that your bank account is $10,000, but you know that at the end of that month, your bank balance was like 80 or something like that, like you need to be asking questions.
Yeah, that's a good place to start. Thanks for making that super practical for folks. What's the most amount of money you're able to save somebody after working with them?
That's probably, man, that is probably a tie for that amount, honestly. It's funny because I have like these case studies that are like really definitive for ways that I've helped people. And so for the $12,000 tax savings for that person, their bookkeeper had been double entering sales. Not all of them, but a lot of. And so when I went to look at their balance sheet, I saw that something wasn't lining up. And sure enough, they had been duplicating some sales. They just didn't understand what they were doing. And the impact of that amount we were estimating to be $12,000 in taxes. Another one, and I still to this day don't know all the details, but what I found was I believe to be $50,000 in cash theft.
Oh my
and
goodness.
that was another one. So tax wise, I can't remember. That was quite a few years ago, so I couldn't remember the number of what that tax picture ended up looking like for them. But that was a big deal. I was proud of finding that one, but not very happy with the prior bookkeeper on that one either.
So you don't know what happened?
They had some ideas, but none that covered the full amount.
Wow, interesting. So I'm sure they probably kicked you out after they were like, she might be a little too good for us. Let's get her out of here.
Yeah, I actually left the firm where I was serving that client. And yeah, I'm not really sure how things panned out after that. I've always wondered if there was theft involved, because it was crazy. It was one of those situations where a bookkeeper didn't know how to map Square into QuickBooks, and they weren't tracking if cash was actually being deposited.
Yeah.
And so there was after I did the cleanup, there was this huge outstanding balance of money that I should have seen come into the bank based off the Square reports, and it just wasn't there.
That's why it pays to find somebody who knows what they're doing and pay them well for it.
Unfortunately, it is true. You get what you pay for a lot of times.
You really do. So I think often about information diets and what are the things that we're consuming, what data points are we regularly putting in front of us. And so I'm curious for you, in relation to accounting, in relation to coffee, do you have an information diet that you consume daily?
Yes, if not daily, definitely weekly. I love learning and growing. Even in launching an accounting firm, you learn so many things just about marketing and sales and all this stuff. Never would have hoped to learn about, but it's actually a lot of fun. Ever since I was a kid, I wanted to be a business owner. So I guess I'm finally achieving that. But yeah, they're kind of like three streams that normally daily I'm dipping into in some way. The first side is just accounting and accounting firms, how to run a really good accounting firm so that I'm serving people at just a really incredibly high quality, just so that I can communicate well to them just on the number side. So operational, basically, for an accounting firm. But the other two is general business. So there are concepts in other industries that are transferable to coffee. So I don't want to be ignorant to those, especially in changing landscapes with AI and everything. I want to understand different industries and how they're utilizing things. And then the third one is coffee. So podcasts, books like yours, interviews, videos, articles, learning more about the scene market or learning more about, I don't know, let's see, Cropster just said they have a bunch of updates for their software coming out. So I've been watching that, so it's just like, there's kind of those three streams that I'm listening to all the time. So I'll be like, okay, what's a good coffee podcast to listen to now? Or, whatever. I just really digging in every single week.
On the accounting and finance side of things, I know you said it was more operational in relation to how do you serve your clients. What sort of things are you consuming? Is there any like websites or blogs that you're going to? What sort of information are you consuming? Well,
so there's continuing professional education that as a CPA I have to take. So that's part of it. So it's really boring old men talking about tax. There's stuff like that. And it's literally old men generally. So I'm not even just like kicking a stereotype. It's happening. And then there are a couple people in the accounting world that are trying to make accounting, I don't know, sexier, for lack of better words. They're trying to modernize it and make it more attractive to especially millennials. The accounting firm has chewed people up and spit it out. So I listened to a guy named Jason Statz. He's super great. Logan Graff. Those are kind of the top two that I've been watching quite a bit. And Jasmine, but she does less of the operational and more of the actual tax information. And then on the general business side, I could not do it for a long time, but Alex Ramosi, I've been watching him, the
Yeah.
guy with the,
Yeah,
the nose
totally.
tape.
Wearing Crocs.
And I so long to avoid it. What is it? Is it Donald Miller, whoever wrote Story
Oh,
Brand?
yeah. Mhm.
Yeah, I watch a lot of stuff from him and just kind of general stuff. If you get on a YouTube stream, then
You'll get
you're
sucked
just
in.
dished up a ton of it. Yeah.
Yep.
Yeah.
What do owners not understand about your work?
The biggest gap in education that I've found so far is being able to define what kind of the back end work we're doing is and how it's valuable to them. That's been the biggest piece. So when you do intro calls, and after the first few, I realized I gotta put a presentation together on what is bookkeeping, what is accounting, and why does it matter. And so that's kind of been the biggest thing so far, is just education on why this is important. And it's not important just because I geek out on seeing clean numbers, and you should too. That's not the reason this is important. The reason this is important is because these are your numbers, and you deserve to understand them and own them in a way that does not feel intimidating or shameful or yucky. There's so much intimidation around the numbers game, especially in coffee. And so I think that's the biggest thing I've struggled with, is how do I communicate and educate people on numbers don't have to be the thing you love, but they can be something that you enjoy as far as it helps you reach a goal.
That's super, super strong. And also exactly who you are in terms of you're just so kind and not judgmental in the way that you talk about finances and accounting and bookkeeping. And it is an area of shame for a lot of folks because it's oftentimes not something that is super tight in a lot of the businesses that we interact with. So I love that.
Thank you. There was a defining moment for me. I worked at that firm working with small business owners. And there was a coffee shop owner that I wanted to help. And so we got the meeting together, 2 CPAs and him. And I just realized that it was not working. And there was just if you looked at the body language, we were the CPAs. We were the smart ones who had the words and knew what numbers we were pointing at. And I felt like he became small in body language. And it just did not feel good. And I was like, of anybody at this table that should feel in power, it should be the business owner, not us. And I always look back and wish that we had been able to serve him better, because nothing really changed after that meeting. But I wish it had. And I wonder if we were able to meet him where he was at and speak his language, if something would have changed. And that's kind of been a driving factor for me in all of this, is how can I make sure that I'm not the person with all the knowledge and the big words, but that the business owner actually feels empowered and like we're a partner, not just like somebody they're trying to impress with their knowledge and scared to ask questions.
That's absolutely beautiful. And you're absolutely right. I feel similarly. I've realized recently that my job isn't to know the most. My job is to empower my clients to be able to get to a solution in an expedited manner. A friend of mine, Ty, I mention him often. He has done a lot of consulting in coffee as well. And I love the way he phrased something. He said, whenever an owner comes to me and we talk about working together, we talk about why should you work with me? And he said, I always tell them, you know everything that you need to. You can figure this out. You're a smart person. The reason why you hire me is expedience to the solution. And I hear that in what you're saying, that the goal isn't to be like, shut up, you're dumb, you don't know anything, pay us and we'll fix it. The tone that I'm hearing from you is, I'm here to support you, to meet your goals, to help you learn the things that you need to learn to go where you want to go.
I mean, Luke, honestly, I just want more good coffee to drink, so I think it's just self-serving.
Selfish with a good outcome for both parties. I like that. Okay, as we close, we have a tradition of sharing 2 to 3 books that have been formative for us. Doesn't have to be related to what you do, doesn't have to be related to coffee, could just be any sort of book that's been formative for you on your journey.
Gosh, well, lately the books I finish are children's books, reading to my kids all the time. So the first one that comes to mind from that arena is We're Going on a Bear Hunt. And you would be surprised the amount of times in my life I'm quoting that book to myself when I'm looking at something hard in front of me, because you know the phrase, you can't go over it, you can't go under it, but oh no, we've got to go through it. And I don't know if it's unfortunate, but a lot of hard moments in life, that book comes to mind. So that's the first one. I haven't gotten to read a ton over the last few years, but right now I'm finishing up a book called Gentle and Lowly by Dane Ortland.
Mm-hmm.
It's about the heart of Jesus for people in suffering, and that's been really cool. So I just kind of read a smattering of stuff, health books, theology, kids books, you know.
Very cool. I love it. I also love that quote of, you can't go around it, can't go under it. You got to go through it. So how does a coffee roaster, a cafe, or a coffee cart, how do they get in touch to work with you?
Well, you can check me out at heyday.cpa. That's our website. Also, social media, we're mainly on Instagram right now. So Heyday Coffee Accounting is our handle. And if you follow us there, we are trying to host this more regularly, but we do a webinar where I go through what basic financials are and red flags that you might spot in them. And so it was really fun. We've done it once already, and we're hoping to host it like once a month or so, so people can bring along their financials and kind of listen and check their own as we're going through. So if you want to see us next time we do that, go follow us on Instagram.
Great. So we'll look to Instagram to keep up to date. Vienna, thank you so much for spending time with us and walking us through these like somewhat complicated things for a lot of us around accounting and bookkeeping, legal structure. Thank you so much for just sharing your time and your knowledge with us so freely. I really appreciate it. And I hope folks get in touch with you if they want to clean up their books.
Oh, thank you so much, Luke.
As always, be well. It's Luke again. I'm back one last time with 2 questions. Number 1, did you learn anything from that conversation? Number 2, did you make a new connection, or perhaps there's a new question as a result of that conversation? If either of those 2 things are true, I'd love to hear about it. Go to my website, pomelocoffeeconsulting.com, hit the contact tab. There's a form down there. I'd love to hear what connections you made, what questions were answered, or what new questions you might have. Let's chat about it. As always, be well.